Hi, my name is Justin Lake from Think Numbers, and today we're going to be going over a question on the issue of capitalizing assets versus expensing the assets. So we have a question here which we've made up, and it's about this company called Montblanc. And I'll read the question to you, and then we'll actually go through the components of it. So Montblanc Inc. spent $100,000 on a patent to register its unique processes through a specialized patent attorney. They also spent $50,000 on legal costs to defend an employee workers' compensation claim. There was a $10,000 invoice for a debt collection matter where it went to court, and there was an invoice for the same law firm for $25,000 to set up a new legal entity with updated terms and conditions. So how would you treat each of the components for accounting purposes? So the first thing I wanted to actually discuss was two issues here. There's issues of whether these are actually assets, so capitalizing assets versus expensing. Now what that would mean is if it was a capitalized asset, it would actually sit on your balance sheet and could be amortized over a period of time as an asset with a future economic benefit, versus an expense that would go straight to your P&L as an expense of doing business. So how do you determine whether it can be capitalized or whether it's an expense? Well, let's go through each of these components and I'll explain how the concept works. So in this first situation, Montblanc spent $100,000 on a patent to register its unique processes. So patents are actually considered intangible assets. An intangible asset sits on the balance sheet just under the property, plant and equipment line. And what it actually means is, even though this is a legal cost of actually setting up this patent, it is considered an asset. And because you're going to get future benefit of this, it can actually be amortized over a period of time. And what that means is it's sort of like depreciation, where you write this off over a period of time. And so that $100,000 and the 100K, we're going to say that that is a capital asset. And therefore it can be capitalized and therefore no impact to your profit and loss. The second situation here is that Montblanc spent $50,000 on legal costs to defend an employee workers' compensation claim. So if this was the case, this is actually a cost incurred in the running of the day-to-day business, and it's not something that you're going to get a future economic benefit of. It's something that is just used to run the business, and the fact that one of the employees has actually put a claim in and you've had to incur costs is actually to do with the running of the business. So in this case, I'm actually going to say that this one is actually an expense, because there's really no benefit. Once that workers' compensation claim has been finished, you've had to incur this cost, therefore it's something that will be an expense to your business. There was an invoice for the same law firm for $25,000 to set up. Sorry, we'll just go back one to this one. Sorry. There was a $10,000 invoice for a debt collection matter where it went to court. Now, in this case, the $10,000, what do you think? Do you think it's going to be capital in nature or an expense? Well, a debt collection matter is really the day-to-day operations of the business. Every day you're trying to get customers to pay invoices on time, and really the cost of actually using a lawyer to actually get this through a debt collection, I would say this is actually an expense of running the day-to-day operations, because there's really, again, there's no real long-term future benefit for you. Once you actually collect the money off that customer, you've had to incur this cost to get a lawyer to help you to get the money. So therefore, there is no future benefit. So I would actually say this is an expense. And then finally, the $25,000 for the same law firm to set up a new legal entity with updated terms and conditions. In this case, if you think about this, there's actually a long-term benefit to this, because you're setting up a brand new entity from scratch that's going to potentially produce more revenues and generate more profits in the future. And updating terms and conditions is something that you will be giving to your customers that will have a long-term benefit. So I'd argue that this is actually a capital asset in nature, and that you could actually treat it as capital. Okay, well, I hope you enjoyed this lecture today on understanding capitalized versus expensing. Please feel free to subscribe to my channel and check out many other videos on accounting concepts. See you later.